This lesson tries to teach you how to calculate your income tax from your taxable income. It's in two parts. The first portion tells you about formulas which you can use to calculate your income tax in a simple manner, and the second one shows you a graphical representation of what income tax calculations are all about. Now, first of all, we'll go through some terms, then we'll go through the tax rates and income brackets, the tax calculations, and then the cess calculations. This video is specifically for the Indian tax system, but its general principles apply across any country. Now, the terms, first of all. As far as we are concerned, we have the total income a person earns during the financial year. The financial year in India is from the 1st of April of one year to the 31st of March the following year. The government usually allows a certain number of deductions from the total income, and these exemption amounts allowed by the government in India are for such things as PF contributions, NSC, medical insurance premiums, donations, etc. The taxable income that you actually have to pay tax on is your total income less these deductions. The deductions are going to be different for each person. Now, the tax itself depends on the taxable income. The higher the taxable income is, the higher the taxes. In addition to the tax, the government has imposed what's called a cess, which is supposed to be usually temporary and meant for a specific purpose. This cess is usually a percentage of the tax. So the total tax payable is the tax plus the cess amount. Now, some of the terms we should be familiar with are tax rates and income brackets. Now, the tax rate is usually expressed as a percentage. Now, it's more correctly called the incremental tax rate for a particular bracket, and it's equal to the extra tax that we would pay if we had an increase of 100 rupees on your taxable income. For example, suppose your incremental tax rate was 30%. Your taxable income, suppose it increased by 200 rupees. Then your tax would increase by 30% of 200 rupees or 60 rupees. Now remember that this is the increase in your tax. It is not your actual tax. It's whatever your tax was earlier plus 60 rupees. Now, these tax rates are different for different tax brackets. Your income itself falls in a bracket, in a taxable income bracket, and it would have a lower value and a higher value. Any bracket would have a lower range and a higher value. They are sometimes known as a tax bracket. There may be several brackets in an income tax system. The tax rates are usually different for each bracket. Now, the income brackets themselves don't overlap. So any taxable income that you have will fall into only one of these brackets, and so you can easily find out your incremental tax bracket, your incremental rate, that is, for that particular tax bracket. Now, here's an example of tax brackets and rates, and specifically these apply for financial year 2011-12 in India. Now, the first bracket is when your taxable income falls between 0 and 1,80,000 rupees. In that case, your incremental tax rate, which is shown in this column, is 0%. The next bracket is between 1,80,000 and 5 lakhs. There you would pay a 10% rate, incremental rate. The next bracket is 5 lakhs to 8 lakhs, and here you would pay 20%. And finally, a third bracket of 8 lakhs and above, where you would pay an incremental tax bracket, incremental rate of 30%. Now, what do we mean by incremental tax rate? Basically, it means that for the first 1,80,000 you pay 0. Now, suppose your income was a little more than that. Suppose it was 2 lakhs. You would then pay for the first 180,000 nothing, and then for since you fall into the second bracket, the bracket B1 here for 2 lakhs, you'd see the excess over the 1,80,000, the 20,000 rupees. On that you would pay 10%. So this 10% refers to the excess above the lower range of the bracket. Similarly, here you'd be paying 20% for the income that exceeds 5 lakhs and of course is less than 8 lakhs. Now, naturally, if you had an income of say and which made you fall into the third bracket, you would first, on the first 180,000 you'd pay nothing. Then on the 1,80,000 to 5 lakhs, this little bracket of 3 lakhs 20,000, you'd pay 10% of it. So that's 32,000. Then from the 5 lakhs to the 8 lakhs, which is a 3 lakh bracket, you would pay 20% of that. So you would now be paying 32 here plus 60 here, so 92, up to 8 lakhs. And then after 8 lakhs, on everything above 8 lakhs, you would pay 30%, plus of course the 92. Now remember that this lower range in India of the zero bracket amount, 1,80,000, actually depends on your age and your sex. It is 1,80,000 for men below 65. For women below 65, as a small concession, up to 1,90,000 you wouldn't pay any income tax. For the senior citizens, that is those between 65 and 80, this amount would be 2,50,000, the zero bracket amount. And for age 80 and above, they've given you a really good concession of 5 lakhs. Now, I've added another column to the tax bracket to simplify things, and which will make it clear. This last column here, the tax calculation method, kind of pre-calculates the amounts for each tax bracket. And so you would get a different formula for each tax bracket, which would make things simpler. For example, we have this calculation for a man having a total income of 9,60,000. Now suppose he had deductions of 1,20,000. Then what his taxable income would be 960 minus the 120 is 8,40,000. Now we would look and see which bracket he falls into. And you'll notice that bracket B3 is 8 lakhs upwards, and that's the bracket he falls into because he's 8,40,000 is his taxable income. So now using the formula, the simplified formula, we have that it's 30% of the taxable income minus 8 lakhs, that is this bottom of the range, 30% of that, plus 92,000, which is actually the tax calculated for all of the income before the 8 lakhs. So he'd be paying 30% of, in this case, since his taxable income is 8,40,000, you would subtract 8,40,000 minus the bottom of the range, 40,000. 30% of that would be 12,000, and add on the 92,000, which is part of the formula. So you would get 1,04,000. Here's an example of somebody who earns 7,60,000 with a deduction of 120 again. So this time his taxable income is 640. So you notice he falls into range B2, between 5 and 8 lakhs. Now here the formula says it's 20% of his taxable income less the bottom of the range, 5 lakhs, plus 32,000. We find that that's 20% of 1,40,000 plus 32,000. 20% of 140 is 28,000, and the 32,000 for all of the income below 5 lakhs. So it gives them a total tax of 60,000. A similar example for a person earning 560 with deductions of 120. His taxable income is 440. He falls into the first bracket, and you'll notice that the formula is just a simple 10% of his taxable income less 180,000, the bottom of the bracket, and you get 26,000 rupees. Now, the cess is an additional tax paid to the government for a particular purpose. Primary education cess is 2%, it's used for primary education in India, and secondary education is 1% of the income tax, used for secondary education. For example, in that calculation where his income tax was 1,04,000, we have to add on 2% for the primary education cess of the 1,04,000, that's 2,080, and 1% for secondary education cess, 1,040 rupees, and so the total tax would be the sum of those, 1,07,120. Now, in our next section, we will show you these progressive and tax rates shown graphically and to explain things better. Thank you.